I brought in Matthew Smith earlier. Is Matthew Smith still with us? Matt, Dan here. Matthew Smith, of course, joining us from Kpler. Matt, just with regards to the reaction that we're seeing in the oil markets right now, obviously the situation continuing to deteriorate. You've just heard the report there that I cited from Reuters, citing the Ukrainian military with regards to that downing of a Russian plane. Brent crude at $101.75. Matt, where to from here? What are markets pricing? And how much higher do you think oil could actually go as a result? Hello to you.
Hey, Dan. Well, what we're seeing is this move in oil here, obviously pushing higher. It's less of some kind of supply disruption immediately because we're not seeing that. It's just getting swept up in all the broader moves in the market. And so we're seeing risk off. We're seeing the flight into commodities like gold. And so we're seeing this move into oil as well, because Russia is one of the largest oil producers in the world. And so it's not surprising that we're seeing this strength coming through here. That said, though, Dan, we've had the U.S. administration say that they're not going to apply sanctions onto the oil and gas industry. At the same time as well, we've had Putin say that they're not looking to disrupt flows. And so even though we have a situation of war here, it doesn't necessarily mean that there's going to be an immediate disruption to supply. And so, the two are so interconnected. Europe is reliant on Russia for 40% of its natural gas needs, 25% of its oil needs. But at the same time, too, as well, Russia is getting 60% of its export revenues from the oil and gas sector. And so there is this reliance from both of these sides on each other. And so while there is that situation there, it means that we're not likely to see the supply side of things interrupted, even though everything else is escalating here.